Hey, everybody. Welcome to Stacky Benjamin's Live on Fireside. I'm Joe Saul-Sehy. Hi, Aric. How are you, man?
I'm doing awesome. How are you, sir?
I'm fantastic. I'm so happy you're going to save us some money. And I'll be right back with you in a second. I'm glad that we got the video up and going right away. So we're rolling here. I'm going to tell everybody, first of all, thanks for joining us. What's going to happen today is that Aric's going to help all of us save some money, and actually not just save some money, because I think that gets overplayed. I think making better homeowners and better car insurance, just better insurance decisions in general, I think is probably the more important part of the game. So we're going to ask him a lot of questions about that. If you are joining us, what's cool about this app and the reason we like this doing live on Fireside is that not only during the first 10 minutes am I going to interview Aric for our Stacky Benjamin's podcast, but after that, you'll be able to ask all your own questions. So if you want to grab any of your paperwork or any of your questions, if there's terms that you don't understand, we've got the guy who probably understands these terms better than 99.9% of us here with us today. So he can answer your questions so you can understand your insurances better. That'll be at the end of our 10 minutes. All right. You ready to do this?
Yeah, let's go. Fire away.
All right. I've got a little headline that's going to get us into this topic, and we'll use this as our starting point. Let me get this up. And I'm going to hit the record button. And this, obviously, everybody is for our audio podcast for later, which you'll hear on the audio Stacky Benjamin show later. And in our headline today, big news from from a website called Gear Junkie about your car insurance. Your 2023 car insurance premiums are likely to go up by a lot. This story written by Evan Williams. He says, where you live and what you drive can make a big difference on car insurance. How much of a difference? And they dive in. We're not going to go any further with this story because we've got an expert of our own here. We're super happy that we've got from Minnesota insurance brokers, Aric Sorenson joins us. How are you, man?
I'm doing great. Thank you. I appreciate it.
Is this true? Do you agree with it? Tell me this ain't so, by the way. Gear Junkie, tell me that they're wrong and my car insurance is not going to go up in 2023.
Yeah, unfortunately, I wish I could tell you they were wrong, but that is not the outline that we're hearing from our carriers or seeing in the industry. And 2021 we saw rate increase, or 2022 we saw rate increases, and unfortunately they're going to continue into 2023. And just a mix of things with the inflation, and you see the cost of vehicles going up and the cost of labor of vehicles going up. And so, I could dive into combined ratios for insurance companies and what they saw as far as auto losses go. And just a quick stat on the auto side, the industry is estimated to run a 108. And what that means is when I talk about combined loss ratio, it's what were their expenses and what were their losses paid out compared to the premium they brought in. And so basically for every dollar they brought in, they paid $1.08 out. So,
wow.
Yeah, so that doesn't bode well for us as the consumers. So, and I'm a consumer also. So I always say I'm kind of the middle guy. I advise my clients, but then I sell the insurance side. So I work for the insurance companies also. But
and what I've learned in my time in insurance is this is really just a math equation. Like, I can't tell you, Aric, the number of times I've been told, hey, these insurance companies are ripping us off. And I go, well, maybe for a little bit, but these are all state regulated. Like maybe you can fool a regulator for a year, 6 months, whatever. But I really feel like it's much more people don't know what they're shopping for and they just are putting a round peg in a square hole. Do you agree with that assessment?
Yeah. There's been a lot of educating that's gone on the last couple of years with our clients, and just trying to help them understand that it's more than just a number. So
well, let's dive into that. One company, Allstate, talks about cut rate insurance being a problem, right? That's their whole advertising pitch for, I don't know, but my spouse Cheryl was talking about the other day. She's like, how long has this guy been on just wrecking people's houses and running into cars in parking lots? Mayhem, the Mayhem guy. Yeah. But they talk about how that's the game. Truly, if I go for the lowest cost insurer, if that's my primary goal, going for lowest cost insurer, which we hear a lot in finance, right? I just want to lowball my insurance cost. People always say, I feel like Dr. Phil says, what could possibly go wrong? And he's being facetious, but I'm going to ask you straight, what seriously would go wrong if cost is my only factor?
Yeah, there's a lot that can go wrong. I think that what you need to look at is you're watching out for your money in the future. And so that unforeseen event happens and we exhaust our policy limits. They can come after you personally, and they can come after you personally pretty hard. And unfortunately, we've seen those circumstances happen with people, and people lose their cabins and toys, and yeah, it's just not a good thing. And insurance isn't only about protecting your vehicle and your home. You have your unforeseen. I like uninsured and motorist coverage. That's that one I pound away on with my clients. That's coverage for yourself and for your family. And so, this we look at state minimum limits and what they require. It's 25,000, 50,000, might vary based on the state you're in, but that is absolutely nothing when we start talking pain and suffering, loss of wages, medical bills. And so, are you going to trust somebody else on the road to have enough insurance to cover your family? It's a pretty big risk you run. So I appreciated you in the beginning saying it's not just about saving money, because obviously we want to save money, but we also need to make sure that we're spending our money wisely on this insurance stuff. So
I got hit by an uninsured motorist on I-75, and I got very lucky. I could see him barreling down on me, and it was an icy patch. I was living in Detroit. And so I actually gunned it, Aric, and got most of my car out of the way. And luckily he clipped me. His front end was horrible. My back end barely looked like something barely happened because I was, moving off to the side. But the guy gets out of the car and immediately says, "Please don't call the police. Please don't call the police." And he's like handing me money. Right. And then I realized he's an uninsured motorist. I got very lucky, but I thought after that, to your point, what if I hadn't been lucky? And also to your point, you look at these numbers, $25,000, like what's that going to solve if we had all gone in the hospital, and then I've got all these issues. Can we do that? Let's do that with these policies, Aric, for people, if you're listening at home or hanging out with us here live on Fireside or on YouTube, if you've got your policy handy, what are those main line items that we see on our deck sheet, right? What are the main line items that we really need to pay attention to when we're evaluating our insurance? I know they're all important, but if you could point out 3 or 4 biggies for us to start, that would be very helpful.
yeah, sure thing. So it's on the auto insurance side, you're going to start with your liability. That's what the state is requiring us to have if we're on the roads. Most states, I think there's a couple states that New Hampshire or somebody like that doesn't require auto insurance, which is crazy to me. But
just buckle up, man. Be safe.
Yeah. So liability is that's your liability to others. So you hit and injure somebody, you do damage to somebody else's car. Sometimes property damage is built into that. Sometimes property damage has its own separate limit. But that's the first big line item. That's where the state is requiring you to carry a limit on that. The next line is typically your uninsured and underinsured motorists, the coverage that we just talked about. And typically on those, you're going to see 2 limits on both the liability and the uninsured. You're going to see a first limit, which is your each person limit, and the next limit is per accident limit. So, and some people have what's called combined single limit, where you just have one limit that's all tied into both of those things. So when you're looking at your policy, that first limit is what we're going to pay out if you injure one person. The next limit is the total limit that will pay out no matter how many people are injured in your accident. So,
are there some guidelines about what we should have for those numbers?
Yeah. So I'm going to tote having an agent real quick here and not buying your insurance online. That's where we come into play. I think it's important to sit down with an advisor, have them look at your assets and what your insurance portfolio looks like and where you should be at those limits. But I start at a minimum of 250,000, 500,000. That's kind of the minimum I start at with people. We have a company policy that we won't do less than 100,000, 300,000. And so, unfortunately, we've had to turn some people away for that, but we just feel like it's so important that you have limits that are adequate
coverage.
And then, probably the best bang for your buck is an umbrella policy. So, and we can get into that, but that extends over your auto liability. Typically it starts at $1 million. And so, and they're really inexpensive when you put into consideration how much coverage you're getting for the dollar amount.
Yeah, I wanted to ask you about that after we do the homeowners, because I know it's generally when you bundle the two, maybe not always. You can educate me on that. But before we get to that, one area back when I was a financial planner, I haven't been a financial planner, Eric, for a long time. But when I was, I would see people that would have towing on their policy. And then they'd have AAA coverage, right? And I'd say, okay, let's eliminate one or the other. That's an area where people are wasting money. What are some other areas you see often when you're evaluating policies where people are wasting money?
As far as the auto insurance side of it goes,
Yeah,
or just in
yeah.
general, as far as the auto
Uh,
insurance side? Yeah, I mean, so that is one of the areas where we see people wasting money. Some of the items I do see, and it's relative to each person, but we start getting older cars. Do we still need full coverage on those? What does the value of that car actually look like compared to your insurance cost? And then you throw a $500 deductible on top of it. I've had people come in where it's like, well, you're actually going negative here. So we see that, and then. I got to be careful because we have companies that we represent, but some of this accident forgiveness and minor violation forgiveness stuff that's being touted all over the commercials. There's a cost built into that, and typically you don't see that cost. I can see it on my end, and so I lay that out for clients, and most of the time they don't want to pay the extra cost.
well, and I think that's an important thing about insurance is that nothing is free, right? When you add in more coverage, which is like accident forgiveness, you're going to pay extra for that. And if you want that, well, then that's great. But still,
And there are people
yeah.
that want that and that feel the comfort in that, and it all depends on what you want to spend your money on. So
Yeah, it's almost like, with life insurance, like, just a whole life policy. Hey, you're going to spend a lot more for a whole life policy, but if you can't sleep without it and you know that it's going to be more expensive, then yeah. Let's do the same for homeowners, Eric, if you don't mind. When I walk through my homeowners coverage, what are the few really important lines that I need to pay attention to?
yeah, so the biggest one is that we start with is your dwelling, that coverage A amount. That's the structure itself. You have your personal property limit, which is your belongings inside there. And so depending on what those limits look like, again, we're running replacement cost estimators right now. I just read recently that they said about 2/3 of American homes are inadequately insured.
Where they
Um,
couldn't rebuild the home for the amount that they have on the replacement.
it was a combination of that and other items built into the
Yeah.
policy with some of the stuff that's going on with matching of siding and roofs. That's a big issue here in Minnesota. But yeah, that's what it was kind of outlining. So one of the big things that we're doing, and a lot of agents are doing, and the companies are doing, is running updated replacement cost and trying to get the homes insured to the correct value. Because obviously the market's gone crazy, labor costs are up, everything's up, unfortunately. So
Sure. Yeah.
but yeah, so that's an important area that we see, and then your liability also there. So very similar to your auto liability, that's somebody gets hurt on your premises. A big thing is liquor liability. That's where we see some big claims come in. You serve somebody at your house, they leave your house. You might never think that they're going to sue you, but their spouse might, or depending on what happens. So that's a big one that we see too. So the liability limit. Most policies start there at 100,000. Same thing there. Honestly, to go to 300 or 500,000, call your agent or go online. However you do your insurance, it's probably 10, $15 to bump up to 500,000. So just simple little things that are a good bang for your buck.
If it's going to happen, it's going to be more than that. It used to be that a lot of homeowners policies had problems with trampolines in your backyard, because they'd see a lot of injuries there. Have you found that still to be the case?
So they've tightened that up. We've had more carriers that'll write trampolines, but they're going to require the netting and the locking on the nets. Some have gone as far as requiring that the yard be fenced in, so some neighbor kid doesn't come jump on it. No, does
Yeah.
that detract them? Who knows?
Yeah. Got you.
But same with pools. Pools is the other big one. Pool diving boards, slides. Those we still have some companies that are on the fence on those. So.
What's the number? If I have a number in my house, or of an item in my house, maybe it's a piece of jewelry, maybe it's a piece of artwork, maybe it's a high tech item, whatever it might be. What's the general rule around how much money that should cost or the replacement value is before I get a separate endorsement?
When you're talking especially items like jewelry,
Yeah,
most of our policies have limitations on theft, and unfortunately, companies had to put that in over time just due to fraud.
sure.
So you theft, coins, money, collectibles, guns, all those things have sub limits within the policy, and depending on your policy, that might be anywhere from 1,000 to 5,000. And so that's an area where we see a lot of people underinsured too. So whether they had it, they just assume that their $10,000 ring is covered, and unfortunately, there's sub limitations on all that. So, and that kind of goes back to what I was talking about earlier. I see it on a daily basis of people buying insurance online, and then just assuming everything's covered. And
yeah. Yeah. I just have a couple more questions before we open it up. When my house got robbed, I was surprised to find.
Oh man, you had all sorts of
I was surprised. I've been through this whole thing, so I know how the homeowner's claim works. I was surprised in two ways. Number one, my insurer was awesome in the way that they said, "Hey, tell us what's in your house," and they largely covered that stuff. And I learned very quickly how important it was that we've been telling people to do videos, right? And keep those videos off site so that you can give them a list. And they were great about ensuring all those contents as long as they didn't meet that maximum that you're talking about. Thing that surprised me was serial numbers. I didn't realize that I should be keeping track of my serial numbers of my television, of my, my TV got stolen, my Xbox got stolen, and they go to pawn shops, and the police work with the pawn shop people, and the insurer wanted to know the serial numbers of all this stuff. And so did the police. Are there any other little weird things like that most people don't know that a guy like you working in this 24/7 knows that we should probably be aware of?
Yeah. I mean, I think you touched on the biggest thing. More than the serial numbers. Obviously they want that because they want to try to find somebody or catch these guys. But the videotaping, pictures, any type of documentation you can have on your personal belongings. That's probably where I see a big issue is, people have a house fire and then they call you 3-4 years later and they're like, "Hey, I totally forgot about this." And it's like, so the video camera, that's a great way to get an inventory and keep it off site somewhere. So whether that's a family member or your insurance agent
All right, guys, we're going to open it up to all of you. Those are my questions. So if you've got questions for Aric, bring those on. If you guys on the team want to tell me what's going on over on YouTube, and let me know if we have questions there. I do have a question here from Katie, who couldn't make it, Aric. Her question, and this is one that I would have asked, but I'm glad that Katie asked it. How often should we be reevaluating this stuff? Our homeowners, our car insurance, our insurances in general?
Yeah, great question. Depends on what type of agency you're set up with and how often they're doing that for you. Or if you're doing it on your own, I would say, you should be looking at that stuff every 3 years is kind of my rule of thumb. If we're looking at insurance costs right now, I think something that our agency is actively doing with these big rate increases coming is we're shopping people because it just has to happen. Companies fluctuate in and out of the market on their prices and premiums and what their actuaries tell them make money and ages and all that vehicles. And so we can see rates go across the board, and where some companies might be super competitive, others might not be. So.
Yeah, it's funny. I've been told that in the past that a lot of the time it doesn't have as much to do with you as it does that this company wants people that are in a certain age range. And when you have a birthday, you might age out of that and some other company wants you more.
Yes, exactly. Yep. So I think that's where, the brokerage firms, the independent agents that have the ability to shop you around kind of stand out and seem to be kind of taken off at this point. So.
I have a question from Elaine here, who also could make it. I've got 3 questions from people who couldn't make it. Elaine said, she asked, let me see if I can shorten this question down. She's basically asking about discounts and about, you see some of these discounts seem to be getting weirder and weirder, Aric. Like what are some of the discounts that surprise you that maybe we should be asking about? Or is there a way to ask about discounts to make sure that we get everything we're eligible for?
Yeah, that's a great question. There's, like you said, there's a ton of discounts out there, and they seem to be growing. I think it depends on the state you're in. They don't have to file discounts, so so they push those through instead of pushing rate through, which they have to get.
Oh,
So that's why
oh,
discounts are such a big thing. You know, I'd say 95% of our business now is bundled home and auto renters. Bundling's a huge discount. Telematics is becoming a big thing. That's the where they're tracking your driving habits, whether that's acceleration or braking.
oh.
And honestly, I think I don't want to put a year figure on it, but I'd say maybe 10 years from now, that'll be mandatory in the insurance industry. So
It just feels so big brother. I did that for a while with USAA, and
cell phones and everything else, right?
I know
So
every time I would
that's the
get,
conversation I have with my clients on that because I feel the same way. It's like, oh, it's Big Brother, but then it's like, well, I carry this phone around everywhere I go. So
I know. I would get out of my car. I had it through USA, and every time I get out of my car, I get a text from USA about how good I did. I felt like my phone is watching me drive every stinking time.
yeah. So that and deductibles. Look at your deductibles. Have a conversation on that. Where what does it look like from going to one deductible to the next, and can we save some of that savings over time to make up that difference? So we see that a lot where people still have real low deductibles, and I'll have a guy tell me, "Well, I'm not going to make a homeowner's claim for less than 5 or 10,000." Okay, well, why do we have a $500 deductible still?
Right.
So, yeah.
Well, and if you've got an emergency fund, right? I mean, frankly, if you've got an emergency fund in place, raise that deductible. And what you can do is actually, I've got my last question here from Jim, and maybe add in this thing that Jim's talking about, because Jim is asking the question that you brought up earlier, which is around umbrella liability. Jim asks, how important is umbrella liability coverage?
Yeah. Yeah. So, like I said, I think that's the best bang for your buck as far as insurance goes. It's the biggest level of protection you're going to get for a cheap cost. And, I could go into that quite a bit, but I would look at so what I do with my clients is I sit down and I show exempt property is in Minnesota. So when I say exempt property is what's protected and what's unprotected. And so we start looking at house values. Your house, like Minnesota, your house is protected up to 390,000. Anything above that can be brought into a suit. We start looking at your retirement, your pensions, your wages. All that can be brought into suit. I mean, people say they can't take your house, but they can take just about everything. So, and when you get into court, they're gonna look at it and say, hey, should you have had an umbrella? And so that's going to deem whether they're going to sue you on a personal level and how much they're going to allow them to sue you for.
I also think two things about this, Aric, which is while you bring it up, I think is interesting, which is I often see lawsuits that go to the extent of the umbrella. They just want the umbrella money, right? I feel like the lawyer thinks the umbrella is easy money, so they go for that number. And yet, so that makes me think, okay, a smaller umbrella is probably a good enough number because that just gets the other insurance company off my back and whatever this, claim is that we might have. But on the other side, I never see these suits at $1 million. Like you talked about earlier, that it's $1 million suit, and $1 million, again, that's a $40,000 a year lifestyle at 4%. So, we're looking at 2 million isn't a lot more. Like, how do I come down on making a decision about what's the right number on my umbrella?
Yeah, so that would be. There's some good calculators out there on the web that you can type into that. There's some different formulas that help people determine where they should be with an umbrella, or sit down with your agent and have that discussion. Have them show you some different options. What does it cost me to go to 2 million, 3 million, 5 million on dollar umbrella? So
I've got a question. Go ahead. I'm sorry.
Go ahead. I was going to share a quick story
yes,
if that's okay.
No, that's great.
We've experienced umbrella work in our own personal family. My brother, when he was 20 years old, still living at home, he sideswiped a girl, and her car rolled and she broke her ankle. Luckily, that's all that came out of that. But unfortunately, she was 21 years old and she worked on an assembly line, and they sued for loss of earnings. And at the time, my parents had a $5 million umbrella. My dad's in the insurance business here. I didn't even get into any of that, but and so the suit came at 500 or 5 million, but it ended up settling for $680,000 for a broken ankle. So
wow,
and that was 20 some years ago.
Wow, how much money? Yeah. Wait a minute, I missed.
So, and I don't mean to downplay the broken ankle, because obviously
No, but I missed the number. I was busy looking at Darren's got a question that's the same question over on YouTube. But what was the number again?
It settled for $680,000.
Wow. Wow.
Yeah.
Darren, glad that.
Go ahead.
No, go ahead after you.
No, I just was going to say, I mean, you start looking at wage loss of earnings. I say this about myself. I don't ever want to have to sue anybody, but if I'm out of work and I got a family support, what are you going to do?
Sure.
So as far as things go, if I'm out of my job and I can't provide for my family, I'm going to have to. So
absolutely. Darren asked a similar question. Darren, I'm glad we got to your question, even though I hadn't seen it yet. So Darren says, he asked if you have a recommendation about how much umbrella liability coverage. I think we did this. He asked if it's based on specific assets, net worth, or anything like that as well.
Yeah. I mean, that's all going to come into play as far as your assets go and net worth. Yeah.
Yeah. It seems like the bigger your net worth, the bigger you want that number to be. And it's a very simple, it's funny, Aric, is it usually when insurances are incredibly cheap, like accidental death and dismemberment. I know the woman that your brother sideswipe worked on assembly line. So for her, maybe accidental death and dismemberment is a really important insurance policy. But if somebody's working in a cubicle, I would see this all the time instead of full-on disability coverage. Like, why the heck wouldn't you buy a full-on disability policy? Like, well, this is a lot cheaper. I'm like, well, yeah, it only pays if you lose an eye, lose a limb, lose whatever it is. And what's the chance if you're in cubicle land that you're going to be typing away and all of a sudden, jack your finger between the J and K key and lose it? Probably not a great idea. But I think that this is one very inexpensive policy that is so worth the money, because even though the number of times it happens is so low, the magnitude is so high and could be so disruptive. Erica's got a question for you. Would you recommend in-person or internet for finding blanket policies for a newly married couple with significant assets?
Can you read that one more time? I apologize.
Yeah, no, that's okay. Would you recommend in-person or internet for finding blanket policies for a newly married couple with significant assets?
I would. You're talking to an in-person guy, so I would recommend in person.
I would also say this, Erica, even if you do it on the internet, having good people in your corner to help you make those decisions, in my opinion, has always paid for itself. And the wealthier people that I worked with when I was an advisor, those are people that could all do this themselves. They could do most of it themselves, but they always surrounded themselves with good, smart people. So finding an agent, maybe a bunch of agents I've met that are idiots, but there's also people who are amazing. And if I can find an amazing agent who's in my corner, who could take care of it for me, then that cost of worry goes through the floor. So I don't know, Aric, that's my opinion.
Yeah. No, I agree with that 100%. And the education part of it, if you're going to buy online, educate yourself with some of the policy, the language that they're having. That's where we see a lot of issues right now. Companies sneaking stuff in, whether that, be some type of exclusion that you weren't aware of, or that they definitely don't post online for you when you purchase the policy. So, I wanted to make one more comment on that umbrella policy also too, is,
please.
I would recommend, if you have an umbrella policy, or if you don't have an umbrella policy, I'd also recommend adding uninsured and underinsured motorist coverage to your umbrella policy, so that your umbrella is made to protect you in the event that you hurt or injure somebody, but we can also add uninsured and underinsured motorist coverage to that too. So it's an extra layer of protection for you and your family. So
I have heard from a lot of people, one of the most underappreciated coverages out there, but a super important one, is renter's insurance. Would you agree with that assessment?
Yeah, I would agree with that assessment. Yeah. Yeah. For one, most of the time, the discount you get on your auto insurance is going to pay for pretty much close to all of
Oh,
that renter's
just by
insurance
bundling the two of them together.
just by bundling. Yeah. Yeah. So, I think the average renters, I'm speaking for Minnesota, but you're probably in the $100 to $150 range for, $20,000 of contents coverage and liability. And you're usually going to get 10 to 15% off your auto insurance. So that, it's hard to find auto insurance for cheap now too. So especially when we're talking about rate increases, that would be an area that I would look to save some additional costs. So
Erica writes over on
you got a
YouTube.
good one.
I'm afraid of idiots too. So Erica doesn't want idiots in her corner as well. Thanks for hanging out with us, Erica. A couple questions here from Tina. I like this one. How does auto coverage work when you rent a car? Car rental agencies always want you to buy this extra insurance, but then they ask who your insurer is, right? Is there a coupling that happens between your main insurance coverage and Avis or Hertz or whoever it might be?
Yeah, good question. So depending on what your coverage territory is, again, that gets into some policy language, but most of us are covered in the United States for renting a car. And so I myself, when I've ever rented a car in the States, I don't take the coverage. I advise most of my clients not to take the coverage because they have coverage that extends from their personal auto policy, and that's going to fall into your property damage coverage. So just make sure that you have a good limit there.
But I like that. I like this idea of knowing your policy. I mean, really what we're doing today, know what these line items actually mean. And don't just, I see so many people, Aric, as you know, that just go online and they try to do an apples to apples comparison. And then just, if it's a cheaper price, then I go by that. They have no idea what the lines actually mean, which is, I think the key to this. Karen asks, how do you come up with the replacement value? Man, I'm going to echo Karen's question here. Karen, you got a good one. How do you come up with the replacement value of your house? Zillow estimate of value. Here's my question. I just changed my coverage, and the number they gave me for replacement value, I thought, Aric, was on the opposite side, where I live in Texarkana, Texas, in the middle of nowhere. I mean, don't get me wrong, I love it. I could build a house and a half for the number that they're requiring me to have as replacement value. I'm like, are you kidding me? And even the agent that I'm working with, an incredibly nice lady, could not explain it, but she goes, no, you can't go lower. You can't go lower. How are we coming up with this magic replacement number?
Yeah, so the insurance companies have partnered with a few different, depending on the carrier, there's a few different Beck replacement. There's a few other ones out there that, so when I sit down with a client, I'm asking square footage, I'm asking number of bathrooms, I'm asking, what do you have for shingles? What do you have for siding? And really getting into that. And so with that, we input that into this replacement cost estimator tool that then pumps a number out for you, kind of what your agent is telling you, just pumped this big number out for you. So we are. I think that Beck is I use Beck, and I'd say all three of them that we use here have gotten a little aggressive on that.
Yeah.
At the same point, when you look at what the costs have done, and one of the things that we have to consider into our reconstruction cost is it's not a brand new build. So there's a tear down process.
Oh, right.
And then it's also, depending on what builder you're looking at, a lot of these builders can come in and they're building 5-6 homes. And so it's a lot cheaper for them to do that when, if you have a house fire, it's one company coming in to build one home and they're going to raise their cost on you for that. So
I didn't think about the demolition, by the way.
All right.
I'm going to call her and I'm going to give her that. I'm going to tell her, hey, next person ask this, ask about, remember demolition. Back to Tina, because she had a couple of good questions. Insuring children, obviously got it. A lot of our stackers, Aric, have a new driver in the family, 16-year-old. You and I both know what happens when that hits. It's like, holy cow, right? But rightfully so. When I was in 16, I had an accident, I'd say about 3 weeks after I had my license. But I know I'm not the only one. How do I mitigate that cost and still have adequate coverage, or is it the best plan to suck it up for a few years?
Yeah. So I see parents out there doing a few different things. One of the things is there's lots of driving apps out there now, whether it's the telematics through the insurance company or an app you put on your phone. that tells you how their driving habits are. So I got some parents kicking butt on that. I also got quite a few parents that they'll charge their kid if they don't get the good student discount. They'll charge them the difference. The good student discount is huge, so that's a 3.0 or GPA or better. And so whether you think that's cruel or not, there's a little skin in the game for the kids. So yeah, so those are some of the things that that I advise clients of, and trying to mitigate some of that cost. But
I like that. Parents maybe can pass that discount on to junior. Hey, if you get X grades, then I'll pass on some of that to you and we'll share the discount.
Yeah. Yep.
Guys, I got just a couple more minutes with Aric. I don't want to keep him here all day, but Jim has a question. This is interesting. A lot of people in our community really like the idea of side hustles, right? Of having multiple sources of income, which is always a great thing. So Jim's is related to that. I like this question. I hadn't thought about it. How about coverage by an auto insurance policy? How about coverage by an auto insurance policy coverage for a car rental through Turo? Is that different than Hertz or Avis? So if I'm renting from you, right?
Yep.
Am I covered the same way as I am if I rent through Hertz or Avis?
Yeah, you're going to have the same coverage that applies there. Now, I actually had a note to talk about that because that's one of the areas that we see on the other end. So if you're the guy that's Turoing your car, or ride sharing, whether that's Uber, Lyft, any of these, and some of these side hustle businesses within homes, you need to let your agent know about that, or let your company know about that to make sure you have adequate coverage for that. So we're seeing more and more misrepresentation claims where the insurance companies are denying based on misrepresentation. So just be really careful on all that. Make sure that you've explained to your agent what you're doing. And if you're going to pick up something like that, I'd run it by your insurance before you do it, just so you kind of know the cost and what's associated with that and the risk you're taking.
Karen's two sons don't have their licenses yet. And she writes, I better be putting money away from when my boys get their licenses, but at least they have above a 3.0. So nice job, Karen.
Yeah. Nice work, Karen.
All right. Aric, thank you so much for sharing your knowledge and your time. This has been a fantastic, just amazing how much you've helped us. If people want more, if people want advice from you, they want to find out how to get more, how to ask you insurance questions, maybe reevaluate their coverages with you guys. How do they find you?
Yeah, they can, insurancebrokersmn.com. Just find me on there. Give me a call. You can call our 800 number, ask for me. I'm glad to help answer any questions, whether they're in a different state or not. We specialize here in Minnesota, but I'm glad to look at somebody's policy and give them some advice, especially if they're listeners of yours, right?
Well, and it's fabulous. The time that you've given us, we'll have links to Aric and to Insurance Brokers Minnesota on our show notes page as well when the audio version of this comes out in a couple of weeks. So guys, thank you for hanging out here on Fireside. Thank you for hanging out on YouTube. Aric, man, thank you so much for your time. This is so great.
Yeah, thank you. And thanks for the good questions. I love seeing people that are involved in insurance and want to know, because it's an important deal.